Hey, what's up everyone? This is Andrew and welcome to the Business Blast for the week. So let's start off by going into some information that we found out from Facebook. Facebook announced they will be going into the cloud gaming market. So this is something similar to a lot of the other kind of social media companies, what they're trying to do, and they're trying to get everybody hooked on different things here. So you had Google trying to do the Stadia, the subscription service where you can basically play games through the cloud. Facebook is now doing this where you can access games directly through their application. So it's whatever device you're on. All the computing power is not like on a console like the PlayStation or the Xbox. It's actually taking place in their cloud environment. This subscription is going to cost around $7 a month. And they're not promoting it to be like the fanciest graphics or the best frames per second or anything like that. What it's supposed to be is for the masses, for anybody to easily access a game through their own application there. Facebook also announced their earnings. So they had good earnings, but they had one metric that was very important that didn't do so well. The daily active users actually declined for Facebook. So this is some bad news and why it sold off a bit on the news. The earnings were actually $2.72 a share, which is above the $1.91 a share estimate that was expected by analysts. They warned of a significant amount of uncertainty for the 2021 year. I mean, isn't everybody saying that now? Revenue was actually up 22% to $21.47 billion in the quarter. Next up, we have some more gaming news. We have esports and how big this industry is becoming. So there's a company called VSPN, which stands for Versus Programming Network. And they actually had another series of funding. This is their Series B round. And basically what the company does itself is that they have professional video game tournaments. And this is becoming a big thing. Like you have regular sports like basketball and football, and you have a lot of people watching those both in stadiums and online, on TV, on everything, and every platform. So now you're seeing the same thing with esports. It seems to be a up and coming kind of media entertainment property here. And the fact that this company is raising their Series B and trying to get $100 million, I mean, that's pretty huge. It's pretty significant. You can see the growth in that industry within the past 10 years or so and what it's become now. And of course, the funding was led by Tencent Holdings, this conglomerate that I feel like I speak about them in almost every one of my videos here because they're always kind of doing something interesting. Next up, we have protests that are going on in Nigeria. And this is significant because, I mean, we have protests and riots and a lot of crazy stuff going on in all different parts of the globe right now. But Nigeria is one of Africa's most populous countries. They have about 206 million people in Nigeria. And they had originally had protests based on, trying to stop police brutality. And in a lot of areas that turned into like kind of looting and vandalism. Well, now they had this place called the Lekki Toll Gate. And what happened was there was a bunch of protesters there, and some were saying they were even chanting the national anthem. And soldiers that were on the security detail there ended up firing into this crowd. And they ended up killing about 10 to 20 people in this incident there. So you're seeing kind of the conflict there escalate and a lot of kind of riots and protests going on throughout the country there. For stocks this week, it was pretty brutal. This is let's see if I could actually put up a chart here of just how brutal it was for the week. Stocks ended up down 5.6% for the week. But more importantly, I mean, you look at one day in this week, and it was down, the Dow was down 943 points, which is 3.5% in one day. Then you look at the NASDAQ. NASDAQ was down 426 points, or 3.73% in one day. S&P 500 down 119 points, down 3.53%. You even had other financial assets such as gold going down $32.60. You had oil going down $2.18. So it seemed to be basically a sell-off in everything. You had the 10-year yield at 0.78%. But you had a sell-off in all these assets around what seemed to be reactions from rising COVID cases around the world that were occurring right now. You had a lot of it in Europe and also in America, and also there's some uncertainty with the election and what's going to happen, but it seemed primarily with the COVID cases and kind of this second wave that's occurring all over the world. Next up, we have AMD. So AMD reported their quarter and they had a whopping revenue growth of 56%. That's huge. Then they also had the quarter, the profit was what was it, triple what it was previously? So AMD is doing really strongly. And you can see this when they're going to buy Xilinx. Had to make sure I could say the name right there. But Xilinx, for $35 billion in stock, they announced they were purchasing this company. And they're expecting to do $300 million in cost synergies by merging these companies together. And they're expected to get that $300 million in the next 3 months. That should be pretty good for them if it works out. And this is another push for AMD going into the data centers area. AMD makes all those microchips and processing. They're in the personal computers, the video gaming areas, and in data centers, and wherever there's heavy processing loads that have to occur. Next up, we have some news in the Chinese economy. We have Ant Group, which is a major player in China for the financial application market. So they're planning to have the world's largest IPO. It's supposed to be for $34 billion. And they're not just doing it in one city, because that wouldn't be enough. They're doing it in 2 separate cities. They're going to have the IPO in Hong Kong, and they're going to have an IPO in Shanghai. So they're going to be listed in both of those and raise, up to $34 billion, it's looking like. There's been a lot of news about this in the past few weeks about how it's going to actually play out and everything like that, and how much they're actually going to raise. If you look at the past kind of largest IPOs that occurred, you had in 2014, Alibaba raised $25 billion. You had Saudi Aramco from Saudi Arabia. They were the previous largest IPO with $29.4 billion raised. And they privatized basically the whole oil sector in their economy. So obviously that would be a pretty big, financial IPO. Then you had Agricultural Bank of China, which was $22.1 billion. What's interesting with this Ant Group IPO is that if you look back in 2018, this company in private markets was worth about $150 billion based on their funding and what they were able to raise and the market valuation on it. Now it's trying to raise enough so that it would be worth $313 billion. So that more than doubled in only a couple of years there. So that's pretty crazy change from where they were a few years ago. And it's kind of interesting also to think about, where are these IPOs occurring that are the largest in the world, right? I mean, you have a lot of these occurring. These are Chinese companies. This is a Saudi Arabian company, right? And 2 Chinese companies. Whatever happened to, when America used to have the IPOs that were the largest in the world? Another thing with the China situation would be the trade deal that we had going on. So there was this trade deal that was passed on January 15th, and it was between US and China. And there were different kind of restrictions and different things that each economy could do and what they were obliged to do. So China was actually supposed to buy $140 billion worth of US agricultural goods. Now, up through September 30th, China has only purchased $58.8 billion worth of goods under the agreement. So that's less than half of what they're supposed to get here. And if you extrapolate this over the year, it looks like they're going to reach a total of only 71% of the initial amount that they were supposed to purchase from the United States. So now if you look at it, okay, there's the pandemic's decline on there, but even without the pandemic, it would still be down significantly from the expected amount of $140 billion. The U.S. export market for the agricultural products is at $40.2 billion worth of goods. And that's different from the annual target, which is $83 billion. So even there, you can see that that's down from the pandemic as well. Now, there was some also news with China trade with a number of companies, actually 3 companies in particular from America, decided to make a kind of a special deal with Taiwan. And Taiwan is a country that China does not see them as a sovereign nation. They see them as part of mainland China, part of the main China, right? They don't see it as a separate country. And China doesn't like when other countries go in and support arms or support treaties with Taiwan directly. So what happened here is you had 3 companies, Boeing, Lockheed Martin, and Raytheon, go in for a $1.8 billion weapons package to Taiwan. So naturally, this upset the Chinese, and the Chinese announced that they're imposing sanctions on those 3 American companies now. And this is pretty significant because Raytheon in particular was already having trouble. They're having trouble with the work from home for their type of work making weapons and manufacturing goods of that nature for defense. And having a work from home situation doesn't really work well with that. Well, now Raytheon they were going to cut 15,000 jobs. Now they're going to cut 20,000. So it's interesting that you have kind of this ongoing trade war where now China is imposing sanctions on specifically 3 American companies due to a kind of a political ideology that they have. Moving on to the next item, we have the Prime Minister of Japan. And I want to say this right. Yoshihide Suga has vowed to make Japan carbon neutral by 2050. So this is a big change in policy here because originally Japan had looked for an 80% reduction in carbon emissions by 2050. So that now they're going to get they're looking to get, very important caveat, they're looking to get an extra 20%. And what they're doing here is he's going to invest in research and development of technologies for solar batteries and carbon recycling. And then on top of that, they want to reduce any reliance on coal-powered energy production. And I mean, the goal here would be to be carbon neutral by 2050. I mean, can they achieve that? We don't know. I mean, they also want to spend money promoting renewables, and they also said nuclear energy, which, Fukushima, I don't know. Maybe that one's a better option. Maybe it's not. That's up to debate. Another thing with this is that you had another Asian powerhouse economy. The second largest in the world was China, and the third is Japan, right? So China said they would be carbon-free by 2060. I mean, technically, China could do whatever they want. If they literally could ban every gas-powered vehicle in their country overnight and just have people deal with it, because that's what you can do, and you can do anything you want. But it's going to be interesting that these are really targets here. And are any of these countries really going to be able to meet those targets, to meet those expectations and those pretty lofty goals? Because if you look at it right now, I mean, we're just starting to have like electric vehicles on the road. We're just starting to switch over to like other forms of energy. And it'd be pretty quick to be able to kind of eliminate all of the energy infrastructure that we had and in a few years go over to a fully renewable source. Not that it can't be done or maybe take a little bit longer, but we have targets now. Speaking about the different energy here and the energy companies, Husky Energy, their share spiked higher this week because they agreed for a $2.9 billion takeover by their Canada rival, as a rival, mind you, Cenovus Energy. So this is an all-stock deal, and we've been seeing a lot of all-stock deals going on for different mergers and acquisitions that are taking place. This is going to create Canada's third largest energy group behind Canadian Natural Resources. So this is actually a pretty big move in that sector. You're seeing consolidation in the oil sector because a lot of these companies are having a lot of trouble, and it seems like this is what happens when an industry is kind of going through a tough time. There's consolidation so that you can have kind of economies of scale and you can really cut costs and become profitable again after the good times are over. Next up, we have companies like Comcast and Time Warner and Verizon and AT&T. A lot of these companies, they issue the broadband internet to your household. And the problem with that is that during the pandemic, a lot of people have been using a lot more data. And those contracts that they had, a lot of them have a 1 terabyte a month data cap. So some people started to get bills now because they were actually being charged for for going over the data cap that they had of 1 terabyte a month. So you're seeing these companies do that. There was a lot of backlash on this. So now after the backlash and after the companies are looking at the situation with the pandemic, they decided, many of them, to actually raise the data cap. Some raise it to 1.2 terabytes so that you don't have this problem anymore. But it was interesting because they also showed the usage stats. Like, let's say you have a family, you have parents, you have kids, and they're all using the internet, they're using the TV. The biggest drains on broadband usage was from streaming players, gaming consoles, and connected TVs. Those were the 3 biggest areas. Next up, we're going to another country in Asia, South Korea. So South Korea announced their GDP numbers. From the July to September quarter, they indicated the GDP rose 1.9% from the previous quarter. That's pretty significant because they're actually having growth here. A lot of places aren't having any growth. If anything, they're in the middle of a recession now because of the pandemic. Korea is actually Asia's 4th largest economy, and they had previously had 2 quarters of negative GDP growth. So if you have 2 consecutive quarters of negative GDP growth, that indicates your economy is in a recession. Now they're going to have this 1.9% positive growth. They might be coming out of that recession. And if you look at some other Asian economies here, you also have Vietnam, which indicated their economy will grow about 2.6% for the year, over last year's quarter. Taiwan is also expected to have 2.2% growth year over year. Now, all of these countries seem to be doing a lot better than United States and Europe with, in particular, their reaction to the COVID-19 situation. Their economies seem to be coming back off of the pandemic lows and making their comeback now. And we're still seeing areas like Europe and America, which doesn't look like that's to be the case yet. Next up, we have some oil companies reporting their earnings. So we have Beyond Petroleum, if I can say it correctly. They used to be British Petroleum, and they changed their name for a marketing term, Beyond Petroleum, because they don't want to be associated with fossil fuels. And this is why. They just had their 5th quarter in a row of zero profit, of actually taking a loss. So 5 quarters of losses for this company. And this shows how tough it is for that oil industry right now and why there's so much consolidation in the industry that we were discussing before. Exxon Mobil also reported, and they reported a loss of 18 cents a share, another loss for a company. Now, one of the ones that actually did well in this industry was Chevron. They had 3rd quarter profit of 11 cents a share, but analysts were forecasting 27 cents a share loss. So they really did well here. It was about half as bad as people thought it was going to be. They reported that they controlled costs, and that's why they did well. So this wasn't that, all of a sudden the oil industry was making a comeback or anything else. This was basically they cut costs enough where they could survive, and barely survive at that. But still, they lost they made a profit of 11 cents a share, and they were expected to lose 27. So they had a slight profit in there. But they're still going to cut 15% of their workforce, which is about 14,000 jobs. I think 1,000 or 2,000 of those are in the United States itself.